Hi, this is Aj.Miller. This is the Aj.Miller Time Podcast, and today we're going to be having a great show for you. We're going to be talking to Michael.Katsus with Comparion Liberty Mutual. We're going to be talking about insurance premiums, why in the hell have they gone up so much, how to lower them, everything real estate involved with insurance, car insurance, and hopefully everything that we talk about, you get something out of it, and it can help you, it can help your budget, your costs. Looking forward to talking to Mike. All right, so today, Mike, we're going to be talking about insurance. Everyone loves to talk about insurance. It's like one of the most fun things to talk about. But I just wanted to, thank you for coming. Mike has been one of my best friends. We've known each other since I moved here in 2009. Mike works for Comparion, which is a Liberty Mutual company, like a mortgage broker, but an insurance broker, right? Can look for different policies. Mike has been in insurance for 18 years, right?
Yep.
So 18 years, a long time. Knows a lot of his stuff. We work together very closely in all of our virtual tours that we do. We office near each other in Rough Hollow. And, I'm just really happy to kind of bring you on. And insurance is a touchy subject. And one of the things that you always tell everybody is, 5 years ago, no one even wanted to talk about insurance. No one cared about insurance.
Yeah.
Now, it's all over the news. Insurance premiums have gone up a lot. And I just wanted to kind of bring you in and talk insurance a little bit and see if we can't help the people out there to understand it more and see if they can lower their premiums or things to look for and stuff like that. So thanks for being on the show.
Happy to be here.
Cool, man. I guess the first thing I kind of wanted to talk about is obviously the elephant in the room, which is insurance going up so much. And since COVID, it seems like insurance has skyrocketed like dramatically. And there's conspiracy theories out there, and insurance companies have been in Congress, and that they make all these billions of dollars, and they're just raising premiums like crazy. And I don't think there's been a lot of really good nuggets of information out there to kind of explain why that is.
Yep.
And I guess I just wanted to, we've always had storms, we've always had earthquakes, and tornadoes, and all that kind of stuff,
hail,
and all of
fire.
it, right? I mean, but. What is your take on it, and why do you think premiums have gone up so much?
Yeah. So after COVID, it was kind of a twofold perfect storm, so to speak, pardon the pun, on what happened. So you had the supply chain, which affected kind of everything, but it also affected materials and labor. So materials went up, labor prices went up, the dollar per hour of these guys all went up. You had construction sites that were fighting for employees because the housing market was booming, right?
Yeah.
So you had that combined with major weather events that happened in Texas.
Okay.
So
we're going to speak Texas specifically.
Yeah,
right?
we're going to speak. We're here in Texas, so I'm speaking Texas specifically.
All right.
Major hailstorms. We had the most hailstorms we've had in like the last 20 years happened in 2021.
Yeah.
And there wasn't any like singular event like a hurricane or a huge hailstorm that affected all of Austin Metroplex. It was almost like a bunch of small storms that affected the area. So and add to the fact that we have to increase what we pay out per claim. So prior to COVID, a normal home in Austin, maybe to replace your roof was $15,000. Now all of a sudden we're seeing houses in Round Rock, $45,000, $60,000 for a 4,000 square foot house, for example, which even 5 years prior was half of those costs.
Gotcha.
So 2021, 2022. Tons of weather events happened. Combine that with the increase of costs. So that's what happened to insurance rates. So people were seeing their insurance rates going 30% higher, 40% higher, year after year, and they're thinking, what's going on? And it's because of those two things.
Well, I mean, that's all great points, and obviously my roof was damaged, and I mean, we still to this day keep having some of these hailstorms in certain pockets all over Austin.
Right.
So I get it, and we can get into roofs and all that and talk for another, God knows how long.
We can have a whole podcast on roofs.
Yeah, a whole podcast on roofs. Is it also because, if a house went from, $300,000 on average to $550 or $600, does the premium have to change based off of the price of the house, or only if they call in on it?
Yeah, I mean,
or is it just mainly that?
It was mainly the claims experience. So people ask me all the time, like, where do they get these rates? Why are they going up? They're going to look at, they expect this many claims and we're going to pay out this much. And then if we far exceed that, then that's where your rate increases come into effect. So the cost of the house, that was again part of materials, labor, just everything, inflation that was happening at the time. I think that's more related to that. You're talking about maybe a total loss. If we're having to pay out an entire house, now it's costing us more than what it did previously. That's part of it, but
your premium's not going to jump because of the cost of the house right away.
Yeah, there wasn't a big increase in total losses. It was mostly just roofs that we were paying out on.
Is that the same thing with cars? Yeah, we had 2 freezes back to back.
Huge freezes that affect. I mean, my house. I had a pipe break. We don't get freezes very often in Central Texas.
2 back to back.
Our houses aren't built for freezes. Like my house built in the 70s when there was never a freeze here. But that was the other thing that affected us was the freezes combined with the hailstorms.
So since then, though, we haven't really seen those kind of catastrophic events other than obviously what just happened in Kerrville and some of the flooding in pocketed areas as many times. This year we've, at this point, knock on wood, not really had any major hurricanes. So when it goes down, so say for example, we had a horrible example in 21-22 and you start seeing all these horrible things happen, obviously a fire in California that was horrible and things like that. But if you start seeing them come down some, do the premiums start dropping? Because I know that when we were talking earlier, you had mentioned that, people always complain that, hey, I haven't had any claims, but yet my premiums keep going up, but yet, I don't ever see my premiums come down. I don't ever get that phone call. Is that true?
Right. A lot of people ask that. It's like, well, I didn't have the claim. Why are my rates going up? The concept of insurance is a shared risk, right? So we want to be able to have enough premium to pay out when you have a claim. Even if you didn't have a claim, you're still paying for everyone else that did, so that we can be there when you need a payout. Does that make sense?
It does. I guess what I think other people might say from what you hear and you see on television and on TikTok and things like that is like, well, why are they still making billions and billions and billions of dollars and they're making the people pay for it when they're still making and raking in tons of money, right? I know it's above your pay grade, but I mean...
So I can tell you this. Most insurance companies, they're only looking to make 5 cents on every dollar of premium that we bring in. So for every dollar that comes in, 95% is going out on claims. So when we are paying out $1.20, $1.30, $1.40, like we did in 2021, 2022, we're going to have to raise rates to
recoup
essentially stay solvent. Big companies like Liberty Mutual, State Farm, like we can go 3, 4, 5, maybe even longer years without making money because we have billions of dollars in cash reserves. But small companies did go out of business in Texas. Small companies did pull out. Encompass pulled out. There was companies that just completely said, we're no longer doing business in Texas because it was so unprofitable. So people hear these numbers, how much money insurance companies are making, but you still have other companies that are going out of business, pulling out of Texas because it's unprofitable.
Some large companies pulled out for a while too. I know even in California, was it State Farm pulled out?
State Farm pulled out of California. Nationwide went on a pause. Nationwide Insurance went on a pause in Texas. So unless you had current insurance with them, they weren't taking on any new customers. So that's our goal. We're not trying to gouge customers. When we pay out on claims, we have to raise rates to, make up our losses so we can stay solvent. And people ask me that all the time. It's like, oh, well, my rates always go up, but they never go down. That's not actually true. So car insurance now, and back in 2020 when nobody was driving, a lot of people got rebates. Rates went down. People were getting checks. Oh, you're not driving anymore? We're going to lower rates. But then what happened after COVID, it's almost like people forgot how to drive. You could, even anecdotally, you're like driving somewhere, everywhere, it seemed like there was an accident. Oh, there's an accident. There's an accident. Everywhere you go, it's like people forgot how to drive. Now that's starting to stabilize. People are back to the grind of commuting, and they're getting used to that again. Accidents are starting to stabilize. And so rates are actually coming down on car insurance.
Well, cars
Home
also went up a
insurance-
lot too. I mean, like
Right.
you had an automobile cost just after COVID just went absolutely bananas, right?
Right.
So I mean that obviously not like house prices, but I'm guessing if you total a car and now all the technology that comes in it, the windows have technology in it. I mean, my
Right.
wife's Escalade, I think the window's like $1,500, something nuts.
Right. Right.
Just if you have a cracked window. So that's good to know. And I guess one thing that you had talked about once with me was this might be good for everyone to know when it comes to car insurance is how important are claims? Like do if I have a claim, well tell us a little bit about claims. Like does it really affect not big claims, even little claims, do they affect your insurance?
Yeah, the number one thing that is, if you're trying to keep your insurance rates down, what's the number one thing you can do? It's definitely not filing claims. And I think people have a misconception. It's like, oh, I have all these different parts of my policy: towing, rental, 24-hour roadside assistance, those type of things. Well, I have those on my insurance. I might as well use them. But all those little things, they actually add up, and they do affect your premium. And they also affect your ability to shop around insurance. So even if you have 2, 3 small claims, like so you get your car towed twice and then you have a small windshield repair, that may prevent you from being able to seek insurance with another company. So it may not affect your rates at the time, but if you start having those claims, like 3, 4, 5, towing claims in 5 years, you're going to see your rates start to creep up, and then it's going to be impossible to shop around as well.
So what would be a good way to go about doing that? To fix something so stupid like that?
The best thing that I can advise, and some people are going to roll their eyes and be like, oh, this is the insurance guy talking, but trying to just if you're in an accident or say you bump into something, get an estimate first before straight going to insurance, because I see it so many times. People have a minor claim, they go through insurance, maybe $100 gets paid out after your deductible, then you have an at-fault accident on your driving record. So getting an estimate first is huge. Also, I don't work for AAA, and maybe there's some other services out there, but having AAA is well worth it. It's like $60 a year, depending on where you live, maybe a little bit more. But if you're having those towing claims on AAA versus having them on your insurance, that's going to keep them out of the insurance claims ecosphere that we won't know about them, and that's going to keep your rates down as well.
So, all that is great. I think, understanding, car insurance, understanding, the issues that are out there to kind of get people to understand why the premiums have gone up so much. Hopefully they do come down as we have less and less of the major stuff, but I do feel that we have seen a huge increase in hail and all that. Kind of going into the end of what I wanted to talk about a little bit into where we are in the space a lot more is real estate. Mm-hmm. So when we go on these tours, like if I'm a home buyer, right? So I've learned a lot from you, so I get to talk to people about insurance, stay in my lane as much as I can. But if you're going to buy a house, what are some of the things as a buyer that you're looking for? Because, what used to be buying a $500,000 house, you might have a $1,500 a month premium, and now it could be $5,000.
Yep.
Right? To lower that, what are some things other than you did say credit matters, right, for insurance, which I don't know if a lot of people understand that, but your credit score actually matters because it shows risk. And I believe you told me, correct me if I'm wrong, the reason why lower credit score people tend to have higher insurance policies is because they've done statistics showing that people with lower scores that don't pay their bills have more claims.
Yeah.
Is that correct?
So everything in insurance is based on actuarial tables, which is just a fancy way of saying we have the data, right? We have the data. We don't pull these rates just out of thin air. It's all based on millions of people, who's having claims, and that's where we adjust our rates. So there's really 5 big levers that are going to affect your insurance rates. The age of the house, newer the house, the less the insurance cost. Age of the roof, same thing. The location, the owner's credit.
Location, tell me more about that.
So your location, distance to fire station. Do you back up to a green space? With all the wildfires we've had recently, companies have gotten more conservative with, writing insurance in certain areas, and you're also getting surcharged If you back up to a green space, you're going to have a higher wildfire risk.
Yeah,
So you're going to be paying more essentially. And then the last thing, of course, we got to talk about is claims. There's two types of claims that are on your insurance. There's weather related or things we consider acts of God, and then other things like pipes breaking, theft, things like that. So if you do have, let's say, a hailstorm, can't do anything about a hailstorm, right? Your hailstorm comes in, you get your roof replaced. That does not affect your insurance.
Okay.
Your insurance rates.
They want you to do that because if you don't fix your roof and a leak happens, you're going to have even more problems, right?
If you don't fix your roof and then years go by and then you do have a claim, there's actually a possibility that the claim could get denied because they said, well, this is an old roof. This might have already been paid by a different insurance company,
Gotcha.
So we're not going to cover it. And then so your water leaks, your theft. Let's say a pipe breaks in your house. People that have water claims tend to have more water claims. It's either maybe there was an issue with the way they installed your plumbing, or maybe there's something that you're doing that's could potentially
negligence,
not using negligence, not proper maintenance. Those could be indicators of future claims. So if you have a water claim, if you have a fire outside of a wildfire,
right.
If you have like a theft. Maybe you live in a not so good neighborhood, or maybe you leave your doors unlocked. That's an indicator of a potential future claim as well. So you will get surcharged for those type of claims.
So that's kind of like once you've bought the house.
Correct.
Right? Okay. But if I'm going to, let's just say I'm out there looking to buy a house, right? So now what you told me is, so we live in Lakeway, Texas. We go to Old Lakeway. They call it Old Lakeway. There's a lot of trees. It's really pretty, right? So there, say you're going to go find this house at $600,000 and it's surrounded by trees. I believe you said, you got to make sure that obviously you won't insure it if there's like trees touching the house, things like that. It's got to be cleared, yada, yada. So the insurance on that house, because those are usually typically older homes. So now you got the trees against you. You have the probability of maybe an older roof. So depending on the roof's age.
Yep.
You have the distance to a fire station. So all those kind of things when you're looking at a premium. Versus, say, you go buy a newer home in Rough Hollow or Sweetwater or something like that around here, and it's a 2017 or 18 house. More than likely, you're saying that the probability of your insurance being lower is probably going to be better on that house.
Correct. Yeah, newer house, newer roof. If you have a metal roof, if you have a tile roof, that's gonna save you some money. We mentioned earlier we could have a whole podcast on roofs. So in Texas, if you have a roof that's over 15 years old, doesn't sound that old, it's going to be more difficult to find insurance. If there's a house that has a 20-year-old, and this is shingles specifically, if you have a house that has a shingle roof over 20 years old, it's almost going to be impossible to get coverage. So when you're making that offer or when you're selling that house, it's good to know, hey, I'm going to have a hard time finding a buyer. It's hard to find a buyer in this market anyway. But if I have a 20-year-old roof and I do have an offer coming in, they're going to ask me to replace that as part of it. So you might as well do it proactively. A lot of roofers now, they'll do pay at close. So if you bought a house, as long as it wasn't the last 2 or 3 years, you probably have some equity. You can get that roof replaced and pay from the closing proceeds. So that's what we recommend.
Yeah, so that segues perfectly into so say you're getting ready to sell your house, or you're a real estate agent out there and you're getting ready to list a house, and a lot of the things we talk about in our tours to the agents and you bring up is always like getting the seller truly prepared for what is to come, right? Yep. That's their job.
Yep.
And I think a lot of people don't really truly, when I call them, some of the listing agents don't know the age of the roof.
Yep.
And I'm doing a loan for someone and I'm trying to get their debt to income right. And, where it used to be maybe it was only $200 a month, now all of a sudden it's $500 a month, because of this age of this roof. So what are some of the things that the listing agent and the seller can do together, like you just talked about, to make the house a better house for insurance premiums for the buyer?
Yeah, so every time you buy a house and you get insurance, you're going to have your house inspected. So we're going to look at your roof. Is the roof in good condition? Is there any impact marks from any residual hail? Is there a layer of granules on your shingles? If you have a 20-year-old roof, those granules eventually they just wear off into your gutters.
Are you even going to give somebody insurance probably on a 20-year-old roof?
No, these are like basically red flags, things
Okay.
that need to be replaced. Also, trees touching. So if you have big oak trees, beautiful. It's nice to be in a tree forest around your house. Those branches need to be at least 6 feet away from your roof line. So if you have a tree that's touching, you have a tree that's close, have an arborist come in, trim those back because that's going to be a big red flag for insurance. When insurance companies inspect the property, they're going to be looking for these things, and some carriers, if you have those issues, they're just going to flat cancel the insurance.
Wow.
Say, sorry, we're not going to be able to insure you. Some companies will give you, 30 days to get all these things done, but you just bought a house.
Yeah.
You just bought some furniture.
Right.
You're cash poor, perhaps.
Yeah.
You're not going to have, I just got my trees trimmed, $3,000 to get
Yeah.
the trees trimmed or
Right.
whatever it is. So those are the two biggest things. The other thing that does pop up quite a bit, diving boards. Can't have a diving board anymore. We have
Can't even be grandfathered in.
No. We have so many claims
Trying
on
to take
those
away all the
things.
fun.
Kids trying to do flips and stuff. They end up in the hospital.
Yeah.
Those are no
What
longer
about
allowed.
trampolines that are in the ground?
Trampolines have to have a net around them. I think most of them do. Unless
Not when they're in the ground.
Yeah, if they're on the ground, I think they're okay, but most of them are elevated.
Okay.
So they
I'm just talking about, like, I know people that actually
dig the
dig the hole and
yeah,
have them
yeah,
in
yeah.
the ground.
Yeah, you're not going to be flying 6 feet,
Right.
landing on your head. The other big thing that we see now is if you have 3 or more stairs, there has to be a railing.
Interesting.
Some people have really nice open patios. You got 3 feet going down to the pool, and there's no way anyone's going to get hurt, or maybe aesthetically,
Right.
there's no way to
It
put
definitely
it.
looks ugly.
Right. Has to have a railing. Have to find a way to put a railing up. We see that a lot now. It's a liability issue. So in the last few years, rates have gone up with insurance, as we just talked about. And restrictions have gone up as well. So companies are more picky. I talked about houses that back up to green spaces, right? Some companies just may not even offer you coverage. But little ticky-tack things, companies are trying to find ways to limit potential exposures. Again, so we're not having to raise rates 20, 30, 40%. The less claims we can take, we're going to pass that on to the consumer.
Man, it's a lot of information in a short amount of time. It is. But, I appreciate you so much just coming in and just talking to everybody. And by the way, Mike has my insurance, my family's insurance. I've used Mike now since I moved here when it came to rent insurance, all the way to buying our first house. He's not only awesome, he's easily accessible. If you do get into an accident, you don't have to call 1-800 number. You can call Mike and just be like, hey, man, what should I do? And he'll kind of direct you through the right thing to do. And he's just a great guy, and I appreciate having you as a friend and colleague and having you on the podcast, man.
Yeah,
So,
thank you, AJ.
Appreciate
If it's been a few years, I always recommend people shop around. If your rates have gone up, maybe you just kind of let it slide, or you don't even look at it because it's included in your escrow.
Yeah.
And you just let it go. It's good to shop around if you haven't looked in a while. And of course, if you're buying a house, get a broker who can look at multiple options. That's going to be your best bet.
Yep. Well, I appreciate you, man.
Thank you so much.
You're welcome.
All right. Can you fill in my receding hairline?